My name is Anupam Anand and you're watching Freedom English channel. Today in this video, we are going to talk about yet another IPO launch which is very significant, and if you are an investor, you should have your eyes on this because it's related to agriculture and farming sector. The company I'm talking about and the IPO launch I'm talking about is for Indo Farm Equipment Limited. So they are into equipments, manufacturing equipments or machineries especially for agriculture and farming. And they're set to launch their IPO on 31st of December 2024. It's exciting, I'm sure, because yes, of course, India is excelling in IPO launches and collection of IPO money. It's on the second position now behind USA and ahead of China this year. In this video, we'll go ahead and explore Indo Farm's business model, financial performance, market positioning, and whether this IPO is worth considering for investment or not. So watch till the end and let's get started. Okay, before we get into the total analytics, let's talk about the company first, where it was founded, when it was founded, what is it into, and what are the specific sectors it is catering in. So this company, Indo Farm Equipment Limited, was founded in 1994. And since then, it has been a key player in making or manufacturing of equipments or tools for agriculture or farming. With a focus on affordability and performance, the company caters to a wide range of customers in the agriculture, construction, and industrial sectors. So as we all know, agriculture or farming has been the backbone of Indian economy, and the recent developments in the technology field also has been helping the farmers to inculcate technology in the field of agriculture and farming and make much more of a production as compared to the previous years. So yeah, this IPO sounds really good and amazing, but yes, let's check the overall business model of this company. So basically, company produces tractors of wide range, even for the small agricultural fields and the large scale agricultural fields as well. The company is also involved in manufacturing cranes that are used for construction and industrial purposes. Their manufactured cranes are very much reliable and are of good quality. The company also manufactures farm implements like rotavators, harvester combines, and plows, enhancing farming productivity. So overall, these were the products or tools that they manufacture in their house. Now they do all this manufacturing in the dedicated manufacturing hub that is located in Badi, Himachal Pradesh. The company actually operates on 1,27,840 square meters of land, wherein they produce or make 12,000 tractors and 1,280 pick and carry cranes. Okay, now also we will talk about the market presence of this company. If we talk about the domestic presence of this company, it has 175 dealerships across the states like Punjab, Haryana, Maharashtra, and Uttar Pradesh. Also, 7% of its revenue comes from the international market, from the countries like Africa, Latin America, Southeast Asia, and Europe as well. So overall, they have a great presence domestically and as well as internationally. They also have an in-house financing arm that's called Baroda Finance Limited. It was launched in 2017 and it supports the customers or the farmers with financing solutions. As of June 2024, they have a loan booking of overall 127 crore and the active customers are 6,000 nearly. The gross NPA is 4.13% and the net NPA is 3%. Okay, now let's quickly dive into the IPO details of the company before the launch. The issue size is rupees 260.15 crore, including the fresh issue that is 184.90 crore rupees, 86 lakh in shares. An offer for sale is 75.25 crore rupees, that is 35 lakh shares. The price band ranges from rupees 204 to rupees 215 per share. The face value is rupees 10 per share. The lot size is 69 shares with a minimum investment of rupees 14,835 at the upper price band. Like I already said, IPO opens on 31st of December 2024 and closes on January 2nd, 2025. The listing date is January 7th, 2025 on both BSE and NSE. So the company is raising IPO, and the reason behind it, let's have a quick look onto that. Number one is production capacity expansion. They're expanding their manufacturing capacity. That is, they need 70 crore for enhancing pick and carry cranes manufacturing. Number two is debt repayment. They have a 50 crore of reducing financial leverage. The third purpose for this IPO is Baroda Finance infusion. So they need 45 crore for strengthening the NBFC's capital base and few other general corporate purposes. Okay, now let's quickly dive into the financial performance, the revenue making and the profitability of the company. In the fiscal year 2021-2022, the revenue was 353 crore. The profit after tax was 14 crore. The net worth was 275 crore. and the net profit margin was 3.96%. The fiscal year 2022-2023 was a little better. So in the fiscal year 2022-2023, the revenue went up to 371.81 crore. Profit after tax was 15 crore and the net worth was 290 crore. The net profit margin was 4.03%. And in the fiscal year 2023-2024, the revenue was around 375.95 crore. Profit after tax was 16 crore. Net worth was 317 crore. Net profit margin went up to 4.26%. So the earnings per share as of fiscal year 2023-2024 is rupees 3.95. Price to earning ratio, PE ratio, is 54.43x at the upper price band, and return on net worth, RONW, is 4.92% in fiscal year 2023-2024. Okay, now let's quickly do a SWOT analysis, the strength, weakness, opportunities and threat analysis for the company. Under the strength, we can talk about the diverse product portfolio it has. It has strong presence in both agriculture and construction equipment manufacturing. It has an established market presence both internationally as well as in India. Also, the in-house financing arm gives the customers a lot of affordability and accessibility so that they can take the loans to purchase the equipments. So it's actually easier for the customers to buy the equipments by taking the loans from the same company itself. Okay, now also let's talk about the weaknesses the company has. Okay, the company has been showing a very moderate financial growth in the last few years. The revenue and the profit growth has been stable but not very extraordinary. Another weakness for the company can be its reliance on specific fields as in agriculture or construction. These are two specific fields. Whenever there's a loss in these particular fields, the company also might face a loss. Okay, now talking about the opportunities, the company has a lot of opportunities if it expands. It has a lot of potential to grow both internationally and nationally as well. The company also has some opportunities if it expands its manufacturing into other equipments as well. I mean, it should be making more equipments for agriculture or construction. Also, let's talk about the threats we have. The company has intense competition from established players like Mahindra & Mahindra, Escorts and Sonalika. Also, the weather dependency can be kept in mind. I mean, the global warming is high on action, and as well, the agriculture machinery sales heavily depend on favorable monsoon conditions. Okay, now let's quickly compare this company with the other competitive companies in the same sector. Like we have on the charts, Indo Farm, Mahindra Tractors, Escorts Kubota, Sonalika Tractors, and in the matrix we'll put as market share, revenue and focus area. So Indo Farm has a market share of 5%, Mahindra Tractors has a market share of 40%, Escorts has a market share of 11%, Sonalika has a market share of 12%. The revenue made by Indo Farm is 375.95 crore, like we already mentioned. Mahindra Tractors is making 7,348 crore, whereas Escort is making 7,050 crore. Sonalika is making 6,320 crore. The focused area for the company Indo Farm is affordable machinery, whereas Mahindra Tractors are focusing on premium and mid-tier machinery. Escorts, on the other hand, is focusing on premium and advanced technology in farming and construction, whereas Sonalika Tractors is focusing on mid-tier and affordable solutions for farming and agriculture. But yeah, let's not forget that Mahindra, Escorts, Sonalika are big names and very old names in the business, and they have been doing really well till now, and hopefully Indo Farm will also do great. Okay, now let's quickly go through the valuation matrix of the IPO. The EPS growth shows 12% CAGR over 3 years. Also, let's compare PE ratio with the other competitors. So currently the PE ratio for Indo Farm is 54.43x in the fiscal year 2023-2024. Mahindra Tractors PE ratio is 32x and Escorts Kubota's PE ratio is 40 times or 40x. And also keeping a note of the debt to equity ratio that is reduced from 1.25x in the financial year 2021-2022 to 0.95x in financial year 2023-2024. Okay, now the GMP, grey market premium of the company, as of December 29, 2024, the GMP for Indo Farm's IPO stands at approximately 25 rupees per share, indicating positive investor sentiments and potential listing gains of around 11.6% based on the upper price band. Okay, now finally, let's talk about the consideration if you should consider this IPO for yourself, for your investment. First, let's go through the reasons why you should be considering the IPO. So the company has diversified revenue streams, as in they are into agriculture and construction as well. They have a steady financial performance with low debt. And also the positive GMP shows the strong investor sentiment. Also noting down the potential risks, the company has a higher valuation as compared to its competitors. And also it is dependent on the monsoon or the agriculture growth simultaneously. simultaneously. So yeah, that was an overall comprehensive analysis about this IPO, and I hope it was helpful for you to take a decision on this. All the best for your investments and all the best for the new years as well. Thank you for watching. Drop your likes and please make sure to subscribe if you haven't yet. See you in the next one.